Welcome back, my friends. The news today is that U.S. crude drops below 70 per barrel. Gas prices fall to 11-month low. Crude oil tanks nearly 4% as U.S. output overshadows OPEC. Prices of Brent crude and West Texas Intermediate were down nearly 4% on Wednesday as an unexpected and significant increase in U.S. gasoline inventories added to concerns about lagging demand. Wednesday's prices reflect the lowest levels of crude oil since June this year, shuffling between a 3.5% and 4% loss throughout the first part of the day. At 1:34 p.m. ET on Wednesday, Brent crude was trading $74.64, down 3.32%, for a 2.56 loss on the day. West Texas Intermediate, WTI, was trading at $69.71, down 3.61%, for a 2.61 loss on the day. The United States has boosted oil production to an unprecedented 13 million barrels of oil per day, and expectations are that U.S. production will eventually reach 16 million barrels per day. And South America's offshore oil boom will challenge OPEC's dominance. But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. U.S. crude declined nearly 4% on Wednesday, with retail gasoline prices hitting the lowest point since January, ahead of the holiday shopping and travel season. The West Texas Intermediate contract for January fell $2.80 or 3.87% to $69.52 a barrel, while the Brent contract for February declined $2.68 or 3.47% to $74.52 a barrel. U.S. crude and the global benchmark have hit their lowest levels since June, despite efforts by OPEC to boost prices by promising to slash supply in the first quarter of 2024. U.S. benchmark oil prices are down nearly 20% in the fourth quarter to below $75 a barrel. Total gasoline stocks from the Energy Information Administration, EIA, for the week ended November 24th were at 218.2 million barrels, compared to 213.8 million barrels for the same time period last year. Prices at the pump in the U.S., meanwhile, have followed oil prices lower to hit $3.22 a gallon on average as of Wednesday, the lowest price since January 3, according to ADA. Oil prices have been on a steep downward trajectory from September highs as nations outside OPEC, particularly the U.S., pump crude at breakneck clip and worries grow about the Chinese economy. Moody's on Tuesday downgraded its outlook for China's government credit, ranging to negative from stable. U.S. crude inventories fell by 4.6 million barrels for the week ending December 1, and gasoline supplied to the market increased by 260,000 barrels per day, according to the Energy Information Agency. Falling inventories and rising gasoline deliveries implies higher demand, which would typically boost oil prices. Pessimism about the economic outlook in China, however, appeared to be weighing heavier on crude prices. Oil traders have also been skeptical OPEC+, which includes OPEC members and its allies like Russia, will deliver on supply cuts of 2.2 million BPD in the first quarter next year. Several OPEC+ members announced the voluntary cuts last week after the group failed to reach a unanimous agreement on production targets. Saudi Energy Minister Prince Abdulaziz bin Salman and Russian Deputy Prime Minister Alexander Novak sought to assure the market this week that they could extend or even deepen the promised cuts. Thomas Varga, an analyst with PVM Oil Associates, said those reassurances have fallen to deaf ears. There is demand destruction coming in from the fuel side. The market is more demand-focused than supply-focused right now. Dennis Kissler, Senior Vice President of Trading at BOK Financial, told Reuters on Wednesday, record U.S. oil production has been vying with OPEC+ for market price influence. The most recent manifestation of this was the OPEC+ meeting on November 30th, during which a voluntary cut of 2.2 million barrels per day was announced. That announcement failed to push oil prices upwards, and the focus remains on U.S. production. The Saudi energy minister on Monday criticized speculators after prices continued to drop for failing to understand the OPEC+ output cut deal. Last week, the EIA reported that U.S. average daily production for September remained unchanged from its record high rate in August of 13.24 million barrels, despite cost inflation and lower international oil prices. At the same time, American shale producers have no intention of letting up on the drill bit. Additionally, weak economic data coming out of China continues to suggest weak demand, weighing on crude prices. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.